Hi everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Hope you're having a fantastic day. We're taking a look here at Matic. It's been a few weeks since we touched on this one here last. I got some community members asking about this. Of course, they have some long trades open, if I'm not mistaken, and we're just going to go ahead and see if it's going to continue to run or if it's kind of done doing what it's doing. Now, Matic has a tremendously excellent history. It does very well for itself, and it does look like it's picking back up again. So I love to see this. I love when altcoins continue to run, and there's a great chance we can kind of anticipate some stronger movements by redrawing out some Fibonacci retracement levels and kind of see if we're rejecting out in a specific ranges. Because right now it does look like we kind of hit this point about $1.90. Okay, so we're going to take a look at that. That was a previous little resistance level. Would not be surprised if that is a new Fibonacci retracement level. So if you're new to the channel, just know I'm not a financial advisor, right? I really, truly do love teaching people how to trade, and I hope you can learn something here today, of course. If you do want to become a better trader, CryptoCash.tech is a site I've been trading for over 17 years and teaching almost the same amount. And I can tell you it's extremely rewarding to be able to help my community members out and get to become self-sufficient traders. Most of them stick around because the community is just such a great community. We have over 1,000 members here in our Discord. It's an awesome experience. But generally speaking, I send out signals for every trade that I take, and you get the chance to be able to join in if you want. That's fully automated through Cornix. Speaking of which, I actually have a partnership with Bitget and ByBit. ByBit specifically recently partnered with them because I love that they work with Cornix and we can do fully automated trades through that. And then, of course, we got a $10,000 prize pool monthly for Bitget as well. Both offer competitions monthly, so we're just going to continue to rinse and repeat these to help give you some benefit. But again, really simple. Trading volume and profit and loss ratio are usually the ways to qualify. Pretty straightforward. That being said, you will need a VPN, so 3 months free with a 12-month plan through Express. Been using them for years as well. Phenomenal company to work with, and protect your identity, right? So take a look here at Matic. What we want to look at first of all is these new fibs that I just drew out, right? So basically I took it from the most recent high, in other words the highest point in which it went, down to the lowest point in which it came, okay? Now we could draw some closer Fibonacci retracement levels to get tighter support and resistance levels, but this gives us a pretty good range. You can kind of see that it's working within this range bound for about a week and a half, broke to the upside, likely retracted that support level, the previous resistance, and continued higher. We can see an initial rejection there, right at that one point I mentioned, $1.86. Seems like a fairly obvious resistance level based on 0.786 on Fibonacci. So let's look at some other things and kind of see what's going on here. So first and foremost, when we see the RSI continuing to progress higher, we broke through 70 on the RSI. That's usually a good sign. That typically implies could potentially see that as a support level moving forward. So if you see this previously here, take a look at where the RSI jumped up over 70, right here at this level, roughly at this point. And then it came back down under 70 when it hit this level here. So ideally, if you start a trade when the price goes above 70 and then sell when it comes back down below 70, you're essentially going to be in profit in most cases. Okay, again, because 70 isn't necessarily a level that's consistently retested, right? You can see this here. There's only been a few times in Matic's history where it's hit 70 on the RSI, right? Now, granted, there were some pretty significant moments when it really stayed above and continued higher, but generally speaking, when the price comes above 70, that's usually a bullish sign, okay? Same thing as well here with the MACD converging. You can see this guy here bouncing off of the previous, instead of diverging here and coming down where they intersect in a downward fashion, the 12 intersects with the 26, you can see that it bounces and continues higher. Basically telling us that the last 12 days compared to the last 26, it's considered to be bullish. So it's definitely doing well compared to the norm. So that being said, big picture here, we're looking pretty good here on the daily for Matic. Let's go ahead and see what the simple moving averages have to say. Kind of go from there. Now, we can see the 20-day SMA working its way up. It's common for the SMA, the 20, to work as an ascending type of trend. Okay, so what we can do is we just kind of stretch out a trend line here, and as long as we can remain above that level, I think we're going to be in pretty good shape. Because again, for the most part, when you see an ascending trend, the 20-day SMA is working concurrent with it. So ideally, for this trend to continue, we want to stay above the 20. That's the initial goal. 50 as well, of course, in most cases, that can also be a trend setter, but generally speaking, being above all three is a very positive sign. So we have green lights on everything to kind of, so far the daily, it should continue further, right? We could also see as well that there's plenty of room here for continuation. If you kind of stretch this out, I mean, we could literally see somewhere in the range of $2.20 in the next couple of weeks, because that's how far it's come already in that sense, right? It's almost, we could almost see a 2x from here in the next, maybe just say month to be loose, if things continue the way they should, right? Never truly happens that way, but generally speaking, that's the potential. So let's go ahead and look at what the potential for pullback would look like too, and see if this is a healthy continuation. Because on the 4-hour time frame, this really tells us a lot. What we can see here, the price kind of comes up, gets rejected initially, comes down, bounces off that tentative support level. So we do have a support range between 107 and 109. So just say 108 to kind of split the difference. We can see that the price kind of averaged itself out there and continued higher. So for almost a full 12 to 24 hours, we saw the price action average out there. That's a good sign. We like to see that. It really just tells us that that's currently the new low. And what do you know? It stayed above this previous high. So once again, if you're not familiar with this, previous highs, you can kind of see this rejection point here, all these candle wicks without breaking through. This would be a case in point where you want to try to get in once it breaks above that level and it stays above that level. The hourly is going to be a lot easier to identify that. But generally speaking, that's what you're trying to look for with an entry, is to kind of find something along those lines. And touch on the RSI really quick here. We can see that the RSI is breaching 70 as well. Also very similar circumstance. Just keep in mind, it doesn't stay above 70 on the RSI on the 4-hour quite as long. In most cases, if you just kind of go from right here to right here, you can see that little bit of an increase there potentially. That lasted about 24 hours, okay? So generally speaking, if we're going to continue above here, we probably have another 24 hours of continuation. In fact, let's go ahead and see what this continuation tells us here based on TD sequential and see where we're at. So first of all, we came down all the way down to a 6, got a reset, up to a 5, a little bit of consolidation, back up to a 9, further consolidation, got at least a little bit of reset there, and then 12 to maybe 16 hours of consolidation, and then the price continued higher. So hypothetically right now, if we got enough consolidation of this area, we're only 2 4-hour candlesticks, basically 8 hours into a potential 72-hour period of continuation to the upside. And I say potentially 72, that's a lofty scenario, because again, this is already the first 36, so hypothetically we should only have 36 more hours of continuation, because you rarely see more than 2 9s in a row on a 4-hour time frame. And to clarify what I'm talking about, TD sequential, it basically just takes the 4th previous candlestick and counts up to a 9. Once you hit that 9, it's supposed to pull back or consolidate. And as we can see here, it pulled back and consolidated, but legged up again. So it's doing what it's supposed to. So this is fairly healthy in this sense. The hourly will tell us if it's definitively healthier, but generally speaking, I like what I see here so far. So let's go ahead and take a quick peek at the 1 hour, kind of see what was going on here. We come up to an 8, sideways action, retrace, bounce. Up to a 9, gets rejected here, likely off the volume weighted average price, whereas the price is too far outside of standard deviation. You kind of got too high for its, too close to the sun, I guess you could say, right? And the price continued to retrace and come down. But as you can see, we had parallel lows. We have this type of ascending type of pattern, essentially where the price comes up and continues further. Once you see that, a good place to buy in is right here once it breaks this descending type of trend. That said, parallel lows and lower highs is a good sign telling us that it's consolidating nicely. You could also compare it with a bull flag type of pattern, right? That's basically what it is. So ideally, if we were to see something like that here, we'd see the price kind of do one of these and then it would come up again. Okay. So hypothetically, we could very well see that once more, but we got to recognize that we have 2 9s, almost 3 9s on TD sequential here. So it has been cranking for a good 36, 72, maybe even 100, what is that, would it be 108 hours roughly to the upside. So again, comes up to an 8, hits its mark, right? Comes up to a 9, consolidates. We're up to another 8. Likelihood of further continuation in the immediate future is lower. But if we just consolidate here, hypothetically we consolidate here and continue further, that's a more likelihood for the price to go up from there. Because once again, we're only at a 2 on a 4-hour, telling us we'll have a lot of continuation left. Right? So to me, it would make sense that the price to pull back a little bit, and what it will probably do if it were to pull back is it'll use this most recent high as a low, and it'll bounce off that point. Okay. Let's see if this is overextended. Let's take a quick look at the 15 and pull up the VWAP, and you can see based on volume, we're well outside of that standard deviation. So capitulation pullback would make sense for this to come down and to potentially bounce off this volume weighted average price line, puts us at that 110 mark. What do you know? That 110 mark is really, really close to that previous resistance area where the price came back and essentially is at new high. So once again, the best way to strategize for an entry or to anticipate how low something will go is to just take a look at the most recent high. If we're not overextended, which we kind of are on the smaller time frames but not the large time frames, we have more room to run. But once again, pullback would make much more sense than a continuation higher because it's overextended and we're well outside the standard deviation here. I do not like to see this on a long position. I would wait for the pullback to 110, consider entry. So what I'll do is I'll go ahead and set an alert here, somewhere in the range of 112, and just kind of reevaluate when that happens. So the little thing I have to always mention here, because a lot of folks will hang on this one word here, when I set the alert at a specific level, it doesn't guarantee it's going to hit that point and bounce. It's a stronger probability, right? We've already analyzed that the larger time frames are looking good and it could continue to run. So there's no guarantee it's going to come back down there, but if it does, I'm going to take another look, make sure to reevaluate and consider taking entry at that point if it looks good. Ideally, what we want to see here is TD sequential telling us we got a 9 on the hourly, and then at that point, consider taking entry. Okay, so that way we're overextended to the downside, we're bouncing out the most recent high, and we continue further. Those are things I like to look for. So hopefully this made sense and I described things correctly. I know I sped through this. Feel free to watch it over and over again until you figure it out, but these are just little things that kind of keep me profitable in the game. And I can tell you that, you know, I do not consistently sit here and look at the charts all day. I do analyze a lot of charts throughout the day, but I'm not sitting here, you know, stuck on it. And I think it's important to find a good risk management and tolerance that works well for you, because you might be better suited for a day trading mentality. I personally prefer more swing trades where I kind of set it and forget it, right? That's why I like to set these alerts, reevaluate later, and kind of get in when it's right, because it does feel overextended even though we're not fully there yet, and we still have plenty of days to continue, and we might even miss out on this entry if it doesn't pull back. That's okay with me, right? Because I got plenty of time to find the right entry, and I think, you know, overtrading is somewhat of a problem if you are swing trading consistently. Like too much of a good thing is a bad thing, right? Have you heard of that? That's a strategy I like to live by. Make sure you you work within your risk tolerance. So, all right, enough rambling. I hope that this made sense and it was helpful for you. If so, comment below. Let me know. If not, that's okay too. Feel free to join the community, and I look forward to working with you, growing with you. Hope you have a great rest of the day. I'll see you next one. Take care.